In this video, guys, we're looking at common pullback buying traps. We've all fallen into these ones. Stick around. Hey traders, warm welcome to you. Thank you for joining me. Pullback buying, great strategy. Pullback selling, great strategy. Works really, really well when nailed right. It's a cornerstone, it's a foundation of any serious trader's setup arsenal. It's just that lovely trend move, the little pause, just waiting. If you time it right, it's so sweet and so crispy and nice because you just get that perfect little entry. It just runs on and you can do what you like with it. You can scale it out, you can look for ultimate highs, you can pull the stop in. It's just such a nice trade. But very often, because it's a nice trade, we're trying to force it in places where it shouldn't be. We jump the gun, we do all these little things that really mess the game up. And it's one of those things you've got to be quite strict with. You've got to start say to yourself, listen, for every 5 I get, I might only get 3, I might only get 2, I might only get 1. You know, we need to be very strict with it because actually, you know, a slight mistake, we'll talk about these in a moment, you know, those traps and these mistakes can make it from what's a great trade setup with good risk reward ratio, with all those other things, into something that's actually not that good. It's a little bit chasey, you're kind of giving away too much in terms of risk. It changes the dynamic completely. So let's look at some of the traps. So imagine we've got a standard drive higher pullback, and you flip on its head if we're selling pullbacks as well. So I guess slightly differently when we're selling pullbacks, there's a little bit more urgency when you've got a really strong move. That tends to be the way it works, unless you're kind of buying, let's say, a stock that's got a really heavy short float and there's urgency from fear in that regard. Most of the time, the urgency is going to come to the downside from fear. So fear is generally more of a catalyst for urgent order flow than, say, greed is, but just minor details. Let's get to the bigger point. So the first thing is you're too early. So very often the trap we fall into is we see the pullback, and you know, if we can imagine, let's just imagine this is the pullback here. So we're pushing up, we see it pulling back, and we see it maybe stall a little bit on a kind of short-term time frame chart, and we think that's it. And we pull the trigger here, and then we see it kind of going lower and drifting lower over the next kind of few minutes, or maybe if you're trading on a 120-minute chart for a swing trading perspective, you see it sitting there and stagnating for a few hours or 4 hours or something, and you end up kind of cutting it. You end up going, oh no, I don't want it because I want it to go immediately, take it off, and then all of a sudden, you know, it starts to pick up momentum and off we go. So too early is one of the major things that you've got to watch out for. Let's address how we might combat those in a moment. Let's just run through this list of the traps for now. The second one is too late. So too late being, you know, by the time it's pulled back and started going, you're kind of chasing it up here. Now, I know that in the textbooks they say, oh well, you know, you buy it on a breakout of here, and yes, under certain circumstances, that's definitely fine. I think that, you know, waiting for that under some conditions, it's a very easy place to get in. It's a binary entry. You can use a stop limit to get in. A stop entry to get in. It's a very, very simple process, and it does work. You know, for perhaps a lot of trades, doing that with a stop below the low, that's fine. But if we're trying to finesse and buy in the pullback and use that as a bit of a cushion, very often if you're chasing it here, you're a bit late, because often the market might rip through, as we take that off here for a moment, it might rip through and then it might kind of do this for a bit and then put you in doubt and take you out of the trade. Naturally, it's forming a kind of larger term flag, brought a longer term flag before it finally goes. So imagine that's a separate trade altogether, but sometimes being too late gets you into the trap because, you know, and also as well, don't forget, guys, we like to think that the market's going to go up, it's going to go down, it's going to go off again. But very often, as you will know if you've been trading, the market will go up and then it will pause a bit and it will just do some business in that pullback zone before it finally goes again. And then if you're late, you kind of find it just sitting around, flirting around underneath your entry point, and it can be a little bit frustrating. You're sitting there thinking, well, I'm just sitting here in a loss-making situation waiting for some momentum to kick back in. Whereas you're much more comfortable position if you'd kind of bought that turn a little bit cleaner at the bottom. So too late. A 3 is buying a tired market. So Very often market will drive up, pull back, and it's not really a pullback for a further move. It's just pulling back and it's just going to get tired. And so very often we buy the pullback expecting it to carry on, and it just sits there, stagnates, or even worse, just kind of drifts lower, runs out of steam, runs out of puff, runs out of volume. Not really any sellers coming in and smashing it, but just that grind lower. There's no more buyers there. The fourth one is not observing any obstacles. So an obstacle would be something, some serious level of resistance above us in terms of buying a pullback, or something that's potentially going to stop the trade going further. It's already quite stretched. Maybe there's a gap fill there already. Maybe there's a really decent resistance level, whatever it may be. There's some kind of obstacle, or even maybe there's some data coming out for an intraday trader. Maybe there's data coming out at this time point here. And, when you get close to the data, the chance of it kind of really roaring up are probably quite slim. It might just sit there and wait for the data and then have a continuation. The fifth one, guys, is that not trading enough size on the juiciest. So it is a trap. Yeah, I know these are all kind of risk management type trades, but very often the mistake that we make is that when we get the perfect kind of entry, it looks really good, all the boxes are ticked, it's a grade A play, we're not pushing enough chips in. I'm not saying be irresponsible and just throw your full line in. I'm not saying that you're just going to shoot from the hip and just go, I think that's a good one, I'm just going to stick all my money on it. No, you're in your trading plan already, you've designed your trading plan, you've got your maximum allocation of risk, but not actually allocating what you have determined is your max risk to the very best ones, because these can be very lucrative. They can be very good if you have a kind of strategy for defining them, for filtering them, for taking them, and for adding the entry. Very often if you know there's potentially got a lot of legs to it, then buying the pullback here and then adding on the break and adding into the momentum is not a bad play, but only under the right conditions. So I think that's a mistake that a lot of us make, is we don't push enough size into what I believe are some of the nicest kind of fundamental strategies out there, or foundation strategies out there. So very quickly, guys, too early. How do we combat the too early thing? Well, really, we have to try to judge, and easier said than done, of course, or too early, just buy at the bottom. Yeah, okay, yeah, great one. We have to try and judge the first time it's stalling, how much momentum we've got. Now this comes down to a little bit of experience, and if we're watching the price action, we're watching how the price is responding. If it's pausing, then we suddenly get a drive higher, that might be the indication. If it's pausing but we don't see anything moving, then maybe you're like, well, let me just wait, and it starts drifting lower. Okay, just wait. You need to have some kind of indication, you need to have something additional that makes you go, right, that's when I need to take the entry. That's when I need to actually pull the trigger and press the button. So something in this zone that gives you that signal, whatever it is for you. It's the same too late. You have to, when you get your signal to enter, you have to pull the trigger on that and get in it. What you don't want to do is as it's going in your direction, then think, I'm going to take it now. I'm going to kind of, get on it. I'm a fear of missing out. I don't want to miss this pullback and this pullback. Be strict with yourself. Say, listen, it's not the price I want. It didn't get to the level I wanted. I didn't pull the trigger on it. I am going to leave it, because it's a dangerous trap, that, guys, and opens up another can of worms. If we're thinking, I don't want to miss this pullback, it's going to go. The best thing you can do, in my opinion, is if you miss that, and we will do, we always miss them from time to time, is to go, right, let me see now if I can wait for another pullback or a pause. So as we come up here, maybe there's a pause here that allows you to take that trade. Of course, if it's not too high already. Buying a tired market, we talked about that. You just want to make sure that it's not already very extended, and not observing any obstacles, looking for any resistance or stuff up there, and not trading enough size on the juiciest. And that just comes down to you defining what is the juiciest for you, what sort of things you need to look for to make it that very grade A plus setup, and then recognizing that when you see it and going, yep, here it is. We're doing it very often. You're not going to have them all day, every day. You're not going to have them frequently at all if they're the really best ones for you. But when you get them and everything's lining up, you go, right, it's max risk time. That's what it is. And whatever size that is, you put it in, obviously managing your risk, obviously making sure you've got a stop in place, and obviously making sure this is predefined. You're not just shooting from the hip and deciding I'm just going to put in 50 lot or whatever it is. You need to be calm with it and calculated. But that's something to think about as well, guys. All right, guys, common pullback buying traps. Let me know yours as well if you've got any that you get caught out, and what are the things you struggle with buying these pullbacks in the comment section below. Take care. Bye-bye.